How you doing, guys? This is Torian Paul, your mentor here, and I want to. Where was I at? Hold on a second. Good. All right, I want to go over what I think is probably one of the best strategies ever. First thing I want to say is, don't be afraid of volatile pairs. And as a trader and as a teacher and trainer, I've learned that it's best to master a pair and stick to that pair. A lot of folks trade multiple pairs, but it's better to find one pair or two pairs that you like, master them so that you can overcome them. And so for me, my two pairs are XAU USD and Bitcoin USD because they have very volatile movements. All right, I want to show you something that stands out like a sore thumb. I'm on a 15-minute chart. This is March 12th of this year. The best trade is this. Oh, and I'll show you, this is something that you gotta wait for. It happens almost every day, sometimes 2 or 3 times a day, depending on what time frame you're looking at. Alrighty. Alright, so this is what you want to see. Before you see a buy, whether you have indicators or not, this is a TDI. This is 50 moving average, 200 moving average, and 800. I'm sorry. These are all exponential. Even though you're seeing, pullbacks. When is the best time to enter? The best time to enter will be right here, because you see the shifting of the RSI going above this yellow line. This yellow line is what's called the baseline. Once you see the RSI above this yellow line after the push to the low, you have one push to the low, the second push to that same low or lower, depending on what's going on, and the RSI is above the baseline, you buy. It's guaranteed buy. This is like this will be considered a swing trade on a smaller scale. And you hold this trade until the high the next day, or until the high of the day you're in. You're gonna go probably back up at least to where you came from. So if you wasn't sure as to how high to hold it, you're gonna put your take profit at the high of the day prior to the low. All right, and as you can see, it went higher than the previous day's high. But this is gold, which means you're going to get good pip movement. So if you just got out at the 800, that's 237 pips. That's not bad. Now, if you held it to the high of the next day, that's over 300 pips. You do the math. This is Hugo's way, which means you can take as small as a 0.01, which would be like a 10-cent trade. So if that one move, that one buy trade, you'd have made $30 off of 0.01, off of 0.1, that would have been 300, off of standard lot, that would have been 3,000, and so forth. The best trade ever. All right, and I'll show you that same thing the prior day. You wait. If you wait for this one particular setup, guys, you can hold trades at least to the low, depending on if you're selling. You can hold it to the low the next day. If you're buying, you can hold it to high the next day. Here's another one. You you cannot justify taking a trade because of pullbacks. You need to be able to correlate beyond a pullback. Okay, it's showing you a sell, but where would you sell? Boom. Why? Well, you got price above the 50 moving average, but the RSI is beneath it, and the baseline is already pointing down. So you could have got in any one of these 3 points for the sell. If you held it, it's 350 pips. All right. Now you will have days like this that are in between a beginning and ending of a trend. So that's why you will want to always get in on something like this. Here's another example. Sometimes these opportunities go over the day breakers. That's fine. Just wait. Take your time. You see them trapping one side, wait for it to do this, because it's going to happen. Okay, where would you buy? Boom, right there. You could have bought it, held it to the high, 384 pips. Here's another one. Stuff happens all the time. You got to be patient, and you have to know. You got to have a reason, like I said, to go. A reason to trade beyond pullback. Where would you take the sell? It's showing you a sell. Anything above the 50 moving average is a sell. Anything beneath the 50 moving average is a buy. But you have to put it in the right time. Okay. Boom. Why would you take that trade as a sell? Well, you have price above the 50 moving average, which is just part of the blue line, but the RSI is beneath the baseline that it's going down. Pretty straightforward. And we can just look for different opportunities. Don't see anything here. You could have got there, but it's short-lived. This is a continuation of a prior down move. You'll see all that when you go on a bigger time frame. This is in 15. So here's another one. And these are the ones that I like, because anything up to 200 is a down. Anything as using the 200 as a ceiling is going to drop. Anything using the 200 as a support will go up. Yeah, let me just see if I can find it. I just saw it. Yep, right there. Boom. And it does take some getting your eyes used to seeing this stuff, but once you see it, you cannot unsee it. The biggest thing that you would have to do is be patient. Okay, like right here, you had this right here. This is more of a retest. If you could have took the sell here, price is above the 50 moving average. Beneath it, that drop would have got you, if you got out of that there, 275, and between 275 and 300 pips. Here's another example. It happens almost every day. You just have to be patient. Okay, don't lock into one thing that I learned. I bought a program from a guy, really good foundational information, but you don't want to lock in to any particular teaching. You have to take what's given and kind of make your own rubric as to what you look for. So here's another. Okay, you have some folks that say don't trade in certain type of sessions, or this session is the best, this session is the best. I found that it's not so much the timing of the day, but it's the setup. So this was the buy. This was to be a buy right here. Could have bought this, held it either to there or to there, made you anywhere between 220 and 250 pips. And the beat goes on. You know what I'm saying? Happens every day. Happens every day. Now, like you said, you have days. Like I said, you have days. This day is between. This is a day that came after a trend took place. This is the completion of a trend day. You can tell by the cliff, the drop off. Comes, it hits the low. Have a little divergence between here and here, here and there. All right, so that comes in time. But the best trades that I saw, as far as the ones that you can hold, the swing trades are the ones that give you that opportunity. Now this is the M15. Now if you go to the 1 hour chart, you will see more in detail how crucial those things can be. You'll see them a lot more often. Like if you see those on a bigger time frame, you know you're good. Like this is one. Let's see here. Same situation. Be a little patient, and you will see. If you miss a trade and you think, I missed it. No, you didn't. Just wait. It's going to happen again. So when would you take the buy trade? You take it right there, because prices gave you a retest. RSI is above the baseline, which is the yellow line, and it's going up. So if you held this for a couple of days, you could literally held it to price went above the 800. That's about 700, between 750 and 800 pips. So if there was a 0.01, I'm sorry, that'd have been $75 to $80. If there was a 0.1, that'd have been $750 to $800. And if there was a standard lot, that'd have been $7,500 to $8,000. And the numbers go up from there. Happens all the time. Happens all the time, guys. Happens all the time. And then you have the obvious, the high and low, the day situations. Like this would have been a trade to take because it retests the high 3 times. All right. I would only take sales at this point because between this low and the low we just had, that's like a retest of a bigger low. But yeah, it's pretty straightforward, nothing major. Here's another one. This is why I like them on the bigger time frames, because you see the bigger picture. You can hold these trades for days and make a nice amount of money. I like using the bigger time frames as a guide to show you what's going on. This is just something brief. I mean, trading is not really, once you got it, you got it, you know. So you have a high here, the baseline turning down, and the RSI is under it. But guess what? Price is still above the 50. So you could have got in there and held it for a few days, you know, for a few days for sure. You could have held it down at least 2 or 3 days. I would have held it here. It came, even with the pullback, it gave you a retest lower. So if you took this trade and that's almost 900 pips, that's a lot of pips. I probably would have got out, because on the smaller time frames, it would show you a trend change here, a trend change there. So you can use the bigger time frames for the bigger moves, but still use the smaller time frames to see the trend change. Happens all the time. Happens all the time. Like let me see if I can find another one. Here's one. It's all about timing, and like I said, this is the bigger time frames, which means you're going to have similar situations on the smaller time frames. Now this is even though it's a bigger time frame, it's still, these are days apart. These day breakers are just one day at a time. So it's not like you're waiting weeks on weeks to find the right setup. All right. So even though it was pushing to the top, gave you a lot of wicks, and then the drop came. So any one of these points, I probably wait to, the wicks is where you want to enter. Held it for a couple days, made you about 750 to 800 pips, called it a day, got out, trend changing here, and got right back in for some, probably about the same amount, and you continue to find the same opportunities. The other pair I want to look at is Bitcoin. A lot of people trade Bitcoin like it's a stock, but it's a currency. So takes some getting used to, but even Bitcoin brings you the same opportunities. Let me go to the 15 so I can show you what I mean. All right, so we got, here's one perfect example. The thing I like about Bitcoin and gold is very volatile, but Bitcoin is even more volatile, and I'll show you why. Bitcoin has a higher ADR. It shows the ADR is a 6-digit number, but because it's Bitcoin to USD, this number is in dollars, which meaning the last two numbers are the change, and the first 4 are the dollars. So the ADR for today is $1,874.93, which means if you had took a 0.01, you'd have made $184. Took a 0.1, you'd have made $1,874. If you took a one, a standard lot trade, you'd have made 18,000. So that's the thing, okay? But like I want to focus on, like I said before, the best trades to take are the ones where you see obviously the indicator showing you the change has already occurred, but it's going to take some time for it to show on the price action side. So you have a high here, you have a retest of that high here, so you want to take the trade, take the sell here, or anywhere above this plateau right here. Really, change this to black. So you don't want to take a trade here. So from here on down, let's say you held it there, that's 2,339 pips and some change. So if you had taken a 0.01, you would have made $233 or 0.1. That'd have been $2,338. If you took a central lot, that'd have been $23,000 in one day. Now, not even forgetting this, okay, this is still divergence, even though it's not the trade that we look for. It's still divergence. So this trade to the top was 3,139 pips. So if you took that trade, you'd have made, say for instance, you took this trade. Now here's the cool thing, when you get to know the pair, you can see what's going on. First thing you need to know is the margin. So what is the margin? The current price is $60,285.61. So the margin for the smallest trade would be at least $60. How do I know that? Well, I multiply 60,000 times 0.01, or 60,000 times 10 cents, I think. Let me see. I got my calculator up here. Oh, that's not right. Let me see. Okay, so you multiply 60,000 times 0.001 to find whatever your price is. You multiply that to find the smallest trade possible. You multiply that by 0.001. Okay, and that will tell you what the margin is. All right. So let's say, for instance, $57,995, $954. I'm sorry. So you took a 0.01 here, you would have to have at least $100. I would say for Bitcoin, I wouldn't even touch it if I didn't have at least $250, because you want to leave room for movement. So you took a 0.01 with $250, you've made $300 by the time it hits the top. So that 300 would have put you over 500, which means you could have still, you could have keep it at 0.01. I mean, you can literally trade Bitcoin at 0.01 and make $1,000 or more just by trading the minimums throughout the week. And then as you begin to grow your account, you want to be able to scale into bigger lot sizes. But I'm not going to cover that in this video. Just want to kind of keep the same flow that I had with gold, showing you the trades that are obvious. So here's one. This would be probably one of the two last examples that I'll show you. Yeah, this is my first video on YouTube, so I think it's pretty cool to be able to help people all over the world. I don't know how far this will go. I won't be doing ads. I'm not trying to sell anything. I'm not advertising for any business. I just want to give a few pointers. If you want personal training, all I'm doing is, if you want to do one-on-one training, I do have a price for that. You can email me. But other than that, I'm not selling anything. I'm going to be real basic in the videos. They won't be a lot of extra stuff. It's going to be very basic information. I only do technical trades. I don't trade the news. I don't do anything fancy. I don't use a Fibonacci tool. I don't trade patterns. I just trade the setup. Okay, so this is another example. This is Bitcoin here. So you would get in for the buy when it retests the low. Perfect example. Retested the low, they're trapping the sellers. RSI is above the baseline, and the baseline is turning back up. Boom. That's 2,000 pips. 2,000 pips at a 0.01, that's $200. At a 0.1, that's $2,000. And at a standard lot, that's 20,000. So the thing about Bitcoin that makes it better than most all the other currency pairs is that the ADR is very high. So the ADR is high, which means it's very volatile, but that does not mean it does not play in the role of the principles that are key to being very successful. And you will get it wrong sometimes, but it takes, for one, patience and not over leveraging. So with that, look forward to some more kind of pointer videos throughout the week. But yeah, this is the best trade setup ever. That's probably what I'm going to entitle it, the best trade setup ever. But like I said, this is my first of many YouTube videos. If you have any questions concerning training, you can email me I'll post my email below, and look forward to hearing from you. Have a good one.